enable.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
It is said that money makes a terrible master but an excellent servant, and that's why we must always remain in control of it. Hello and welcome to the Mutual Fund Day Family Financial Plan series, a show that helps you chart the best path to reach financial security. Each episode, we feature a different investor from different parts across India to understand their financial planning journey and to see how their life has changed thanks to the right financial planning. This episode is no different. Today, we feature Suhash Jani from the city of Surat. Let's take a brief look at his financial planning journey so far.
On this episode of Mutual Fund Day Family Financial Plan series, we explore Mr. Suhash Jani's financial planning journey. Mr. Jani, a resident of Surat, is a businessman. His family includes his wife Purvi Jani, who is a homemaker, and their two children Devansh and Hiya.
Our family business is a Farsan shop, which is our ancestral shop. It is 68 years old, but I am into construction business. I am a civil contractor, and I am doing construction of high-rise building, multiplex malls and industrial. Regarding investment, I am a bit late, but better late than never. I did about from 2011 or 12, but I missed the golden period of 2008 when the market was crushed. Since 2011 and 12, I met Mr. Svetang, my advisor, and from that time, on his advice, I'm investing in mutual funds and markets and like that. Till now, before any investment, I was unaware of the fact about the inflation going so high and about the future. But after meeting Mr. Svetang, I got a good review and a good help to invest my funds properly to get a proper secured future. So now I'm a bit relaxed.
Mr. and Mrs. Jani started their investment journey in the year 2011. Today, 70% of their investments are in equity and 30% in debt funds.
Regarding mutual funds, I am investing since 2011-12, and I am getting a good returns, which I had not thought, but amazingly it is very good. Well, being a businessman, we have ups and downs every time, and to keep a fixed income for the future and for my ongoing business, liquid mutual funds are very helpful. So we can get money in 2 to 3 days.
With efficient planning, Mr. and Mrs. Jani look at mutual funds as an instrument to achieve their long-term and short-term goals and to grow their wealth.
My long-term goals, I am thinking for my, first of all, I am thinking for my kids' education. As day by day the education is getting costlier and costlier, and I'm also thinking for them that they may go to abroad for further studies. And after them, their marriage. Nowadays the marriage costs are also going too high, and believing that marriages are made in heaven, I want to make it a grand marriage. And last but not the least, about my retirement. At the time of my retirement, I should live a happy life as I am living now. As I am very fond of cars, I change my car every 2 to 3 years, maximum of 4 years. So my car is my passion, and every year I want to spend a good quality time with my family. So we go on a foreign trip every year. So I want that all to indulge in my short terms.
Well, now that we have a broad understanding of Suhash's financial planning journey so far, let's take a short break. On the other side, we will be decoding Suhash's balance sheet, and to help us do that, we'll be joined by Shwetang Seth, an independent financial planner. Stay tuned to CNBC TV 18.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Welcome back to the Mutual Fund Day Family Financial Plan series. Now, in the previous segment, we got a bird's eye view of Suhash Jani's financial planning journey. In this segment, we'll try to understand his investments and goals. And to help us do that, we'll be joined by Shwetang Seth, an independent financial planner. Gentlemen, thank you so much for joining us. Suhash, let's start with you. Looking at your portfolio, you're invested 70% in equities and 30% in debt. Would you characterize yourself as a high-risk investor?
Yes, of course, yes.
Okay, could you give us more details about how this asset allocation has happened, as in so that our viewers can understand a bit more about your financial planning journey? Give us a bit more details.
Actually, I have started my planning a short while ago, and I have actually missed the period.
Okay.
When the market was crashed in 2008, I was a bit late, but better late than never.
Okay.
And since I met my advisor, Shwetang Seth, and he made me through the series of investments in small and equity mutual funds and debt funds. And through mutual funds, it is a good gain.
And did you feel somewhere a bit afraid that you're investing so much in equities, or did you plan it in that sense that where you said that I am okay to take this much risk and therefore I'll invest a bulk of my investments in equities?
No, definitely I have to take risk, because without risk, no gains are there. And to suffice my future plans and everything, I need to take some risk.
Okay. And is all your investment in equities through mutual funds, or do you have some direct investments in stocks as well?
No, I have about 60-65% through mutual funds, and rest along to the debt and direct investments.
All right, let's start with the prognosis, Shwetang. Looking at his risk profile, do you see his asset allocation matching his risk profile?
Yes, asset allocation plays a vital role in wealth creation. Asset allocation depends on investors' goals, time horizon and risk appetite. Actually, his risk appetite is very high, and almost his all goals are long term. So we selected asset allocation 70% equity and 30% debt to achieve his all the goals, because he has started his journey little late at the age of almost 34-35 years. To achieve his corpus, we have divided his asset allocation 70% in equity and 30% in debt.
And what's your view about contra funds? Usually when markets are at highs, there is a certain rationale to go for contra funds. In his case, what would you suggest?
Instead of contra funds, I have given him asset allocation fund like balance advantage category. So normally they are like somewhat arbitrage. That invests 20% to 70% in equities, and time to time they book profits if P ratios, price to book value ratios are going above the level. They automatically shift their portfolio into arbitrage funds, and returns from arbitrage fund is also tax free after 1 year.
We'll come to arbitrage funds a bit later, but sticking to contra funds, what would your advice be to viewers watching, as to, because they will be wondering when markets are high, what do I do, because there will be that fear of should I get in right now, and in that sense, what would you tell them about contra funds, the do's and don'ts?
I don't feel they go into contra funds, because when the contra story starts, it is anybody don't know. So better you go for a asset allocation funds, so your capital will be safe and you will get moderate returns.
All right. Now let's come to the debt part of the story. Are you invested in short-term debt funds?
Yeah, I have invested a few in short-term plans.
Okay. And what is your liquidity picture? As in, is it also to kind of enable you to have access to liquidity where you have invested in this these short-term debt funds?
Yes, few of the investments are like that we got a short-term liquidity fund, because according to my plannings, I need liquid funds on my hand.
What's your usual monthly expense like? Does it help you match your monthly expense?
Yeah, definitely. After proper tax planning, now I'm a bit relaxed.
Okay.
So I have given 4-5 months money we have parked into liquid funds for emergencies.
Okay.
And for longer duration, I have given him accrual debt funds. So he will get tax efficient returns. Okay. Instead of fixed deposit, he will get tax efficient returns in accrual debt funds.
All right. And Shwetang, for our viewers, how can they choose the right short-term debt funds, considering it's it's not totally risk-free, because that's what they would usually think, but it's not totally risk-free. So what should they look for while choosing the right kind of short-term debt funds?
Normally, if your horizon is up to 3 months, one should go into liquid funds only. If horizon goes beyond 6 months, then one should select short-term funds. And if the horizon is more than 1 year to 3 years, then accrual funds are best products. And even if someone sells accrual funds after 3 years, he will get indexation benefit, and there will be very little tax. If he is falling under 30% tax slab, he might have to pay only 4 to 5% tax after indexation.
All right. And you've invested a few options in terms of balanced funds as well for Suhas, right? Tell us a bit more about that, because you have equity funds, you have debt funds, but you also have balanced funds which have a mix of equity and debt. Is there a benefit there in terms of tax planning as well? Because I guess they're counted as equity when we look at...
Normally, balanced fund invests at least 65% in equity. That's why the return from balanced fund is tax-free after 1 year, and remaining in 35%. So your portfolio will be rebalancing time to time. So, and normally in long term, debt funds, balance funds are also given nice returns like 15 to 16%. So it is better to add balance fund in the portfolio.
And what part of your investments are in property? If you could outline that for us. Have you reduced those holdings and invested more in funds?
Yes, definitely. I have diverted a part. Actually, I have diverted a major part from the properties to the mutual fund, because mutual funds are safe.
All right.
And highly liquid.
And highly liquid, absolutely. Now, let's focus on the tax planning aspect of it, something which you mentioned earlier. Could you outline for our viewers what are the tax planning instruments that you've employed to help Suhas reach his financial goals?
In Suhas' case, we have selected equity-linked savings schemes of mutual funds, and he has already some life insurance plans. So we have not stopped any plans. It is going on, and he's saving his tax through that premiums. And I have suggested him to take one term plan, because he was paying so much life insurance premium, but against that his life insurance coverage was very less. So I advise him to take a term plan for the financial security of the family. Right now the combination is ELSS schemes and insurance premiums.
Right. And what about say an arbitrage fund, because they are also seen as an option for tax efficiency?
Arbitrage funds, tax efficient, its return is tax efficient, but it is not eligible for deduction under section 80C. So we have not taken arbitrage fund as a tax benefit, but we have included in the portfolio for getting tax-free and moderate returns.
And for the benefit of our viewers, could you tell them how to go about when it comes to planning their goals and looking at the returns picture? Because you cannot have goals which are not in sync with the returns that you're kind of expecting. And so what would be your advice to them when it comes to forming goals and managing their expectations when it comes to returns?
Right. Asset allocation is very important in every case. So one has to decide how much period he has and how much risk one can take. So on that basis, we can choose the products, whether how much to go into equities, how much to go into debts, and how much to take insurance. So first one has to identify his goals, and then evaluating the current position, and then I will design the strategies how to achieve those goals.
All right. On that note, we'll take a short break, but stay tuned. On the other side, we'll be discussing more about money management with Suhas and Swetang. Stay tuned to CNBC TV 18.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Welcome back to the Mutual Fund Day Family Financial Plan series. We're tracing the financial planning journey of Suhas Jani from Surat, and of course to explain his journey with his insights, we're also joined by Swetang Seth, an independent financial planner. Suhas, we discussed your short-term goals and we got a broad overview of your investments. Let's talk about long-term goals. Now, what are your key long-term goals that you're planning?
Well, about the long-term planning is always beneficial and in comparison with the short terms. On a long term, we always think for the future of our children's educations, their marriage, and also for my parents who are now old.
Okay. Could you outline the cash flow situation currently with your family, as you mentioned, your parents and your wife and children?
Actually, we are having a family business and we deal in cash. So in terms of emergencies, I had to need proper planning. So I had discussed about the proper planning and regarding my future with my advisor, and he has helped me for fixing all the...
Okay. And is it a broad look that you're looking at retirement planning? Because you also have to look at age, right? Because say from 60 to 70, you will be mobile and active, which will involve more vacations. 70 to 80, you will be a bit more sedentary. You'll be at home, but you still want to enjoy life. And post 80, it's mostly healthcare focused, where your retirement will have to focus on your medication expenses. So have you thought about your retirement planning in those stages, or is it still a broad overview?
No, definitely. I have thought that I would be retiring at the age of 60, 65 because I am into the business, which 60, 65 is okay. So after my retirement, I have to plan so that taking into consideration the inflation going so high, the lifestyle which we need, which will not suffice under proper planning. So to take proper planning and to invest through proper channels, it would be helpful.
All right. Shweta, what was the right mix of investments to kind of help Suhas attain his retirement planning goals? What do you think were the right mix of investments?
Right mix, it's 70% goes into equities through mutual fund SIPs, and 30% in debt funds plus gold for children's marriage, and remaining in life insurance fund, which he has already taken earlier.
And gold is gold funds you're talking?
Gold funds, yeah. Actually, I have added gold funds because it saves the making charges plus locker rent charges. So these are the benefits, and hassle-free. You can keep hassle-free.
Okay. And in terms of retirement planning, what do you think should be the key do's and don'ts for viewers watching at home? How should they go about retirement planning?
Normally, everyone invests for their future, but most of them don't have any idea how much corpus they would require at the time of retirement. And because of that, they do not have any idea of investment required today to build the corpus for retirement. Points to be considered while planning for retirement: inflation during the accumulation phase. Secondly, expenses, current expenses, inflation during vesting period, expected your household expenses at the time of retirement, like life expectancy in the family, and post-retirement period. If the post-retirement period is long, then one has to accumulate larger wealth as compared to shorter duration.
All right. And would you also advise Suhas to kind of front load some of his retirement planning investments? Because as they say, the earlier your bulk of money forms, you don't have to take much effort later on. Because if, say, in that period of between 35 to 55, he's kind of front loaded a lot of his retirement planning investments, he doesn't have the pressure anymore, where at 55 to 60 he can just coast along knowing that he's formed a bulk of his retirement planning investment.
Power of compounding always achieve in long term, and equity mutual fund is one of the best asset class which gives the real test of power of compounding to the investors. For that, one has to start early, invest regularly, and stay invested for a long term. So he has started at the age of 35. It is not so late, but he has to invest more amount.
Okay. Now, Suhas, you run a business. So, is there any facility for you to create an emergency fund? Have you thought about creating an emergency fund?
Yeah, business are every time volatile. We have no smooth running. Sometimes it is high, sometimes it is low. So we have to keep in mind the funds for the volatile periods.
All right. What kind of arrangement has he made in terms of?
He was facing, earlier he was facing frequently crisis in the business. So I advise him to keep aside some money and park it into the liquid mutual fund schemes. As per his knowledge, when he will require or when the shortage might arise. So we have used liquid funds for that.
What would you advise to, say, Suhash, who's already invested in a fund and you notice that there is some change in the nature of the fund? What would be your advice to him?
If the nature changes of the fund and it is suitable to his objective, then we will continue with that fund.
Okay.
Otherwise, we normally review the portfolio every 6 months. And if required any changes, then we will change in schemes or so on. But normally it doesn't come into our portfolio. But we keep changing schemes when we review the portfolio.
All right. Suhash, before we conclude, how would you rate your financial planning journey so far? What are the key lessons that you've learned in your financial planning journey?
Also not aware that what would be the future for my kids' education if I want to send them abroad for studies. I haven't planned for them. So while saving through mutual funds, I am securing my child's future, which is the main aspect of my life.
And if there's one thing you could change in this financial planning journey, now that you know more about how the funds universe operates, if there's one thing you could change in your financial planning journey, what would that be?
Well, I would transfer my debt funds to mutual funds.
Okay. In terms of summary statements, Shwetang, how would you rate his performance, his financial portfolio's performance so far? And again, any tweaks you would suggest or anything you would have done differently than what you had done already?
Actually, I have prepared comprehensive financial planning for his all the goals like retirement, education, children's education and marriage. So we are ready for all the goals and invested through SIPs and different debt funds to get tax efficient returns, and I have tried to give him as much possible as good returns. Till date, we have achieved almost 16 to 17% tax-free returns, which is, he feels this is very good return. I'm getting tax-free returns.
All right. On that note, we'll conclude today's show of Mutual Fund Day Family Financial Plan series. Thank you to our guests for sharing their stories and their insights. And we'll be back with another journey of financial planning from a different part of India. Stay tuned. Thanks for watching.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Focus. Ideate. Innovate. Enable.